Casey Boland is a financial advisor with Hang Hole Capital Management. He's always on Mike McConnell's show. Casey, I saw this headline. I wanted to ask you about it. It says, short-term thinking with long-term capital.
Well, there's so much information out there anymore, but information it's a double-edged sword in the investment industry. Investors now have access to more opinions, analysis, real-time prices, and research than ever before. It cannot be overstated how much this has changed the investment landscape compared back to the pre-internet stone age of insider tips, expensive research subscriptions, phone calls, and a lack of useful historical market data. So with all this information, one of the big downsides, though, investors now tend to have a more short-sighted approach when they look at their investments. It happens with even big institutions as well.
There really isn't a short-term investment, is there?
No, I mean, I think if it's a short-term investment, it really needs to be in cash, because if you've got some type of short-term need, that money can't be at risk. But Larry Fink, who's the CEO of BlackRock, he was having a dinner with a manager of one of the world's largest sovereign wealth funds, and the fund's objective is generational. Mm-hmm. And so he asked the fund manager, he said, so how do you measure performance? And the fund manager answered, quarterly. And so here's a fund manager, their objective is generational, and they're measuring performance quarterly. That's way too short of a time horizon for such a long-term objective.
So we need a good financial advisor to point us in the right direction during good times and bad times with our money.
Most definitely, and because I think a lot of people, they will confuse how they look at their money, so it's good to have a financial advisor involved in the picture. And then also, you may think about your money in more of a bucket type of an approach, where some of the money may be for more short-term needs. You need to invest accordingly for that. Some money may be more intermediate, and some that's going to be more geared to long-term and retirement, and that needs to be invested in stocks. That way, when you look at it from that approach, you don't worry so much when the market's going down, knowing, hey, this money was allocated for long-term goals. I know that was my goal. I need to stick